My name's David Mathuva. I'm faculty at Strathmore Business School, where I teach accounting and finance related subjects to both our graduates and executive programs. First thing I would say, banks, because of the very activities they carry out, they are classified as public interest entities. Because they are open to the public, anyone can walk in and request for a loan. If you meet the requirements, you get it. Anyone can deposit in the banks. And one of the quickest reactions I'm foreseeing in this is if the bill gets to be enacted and becomes an act, borrowers are looking, they are watching the space, because now, even if you look at the current statistics, people have still been borrowing with banks. Even with the high interest rates, they've been borrowing from the banks. And I'm seeing a case where if the interest rates go down as a result of this capping of interest rates, more people will of course be willing to take up loans. So I see the uptake of loans, of course, is likely to increase because now it becomes cheaper to borrow. And I will also see more people might now get wherever they've been keeping their money and taking it to the bank. Because if you look at the current bill, it also suggests that banks should give a return, an interest should give a return on the funds deposited by the depositors. If I can quote from the bill, it talks of the minimum interest rate on deposit in interest earning in Kenya should get at least 70% the base rate set by Central Bank of Kenya. My interpretation of that is anybody who has deposited funds in any bank should get a return on those deposited funds of up to 70% of the base rate by the base set by Central Bank. For example, if we are to go with the current base set by the Central Bank, which is at 8.9%, now if you deposit your money with the bank, that means you'll get a return of up to 70% of that rate, which means you'll be getting an interest rate of 6.23%. So it will make sense for you to deposit with banks, even though now it's not fixed deposit, just any deposit. So depositors would want to keep money in the banks now, more money even. And at least you'll be getting a return, because if you compare with what is happening currently, what you get on your deposits from banks, assuming a normal deposit, not a fixed deposit, it's negligible. It's almost zero. Sometimes even banks do charge money on your deposits. So if you had put like 10,000, you might even end up getting less than the 10,000 you had put. But now with this bill coming into force, it will mean now for the 10,000 you've put in the bank as your deposit, you'll be getting a return on that money. Now, savings and credit cooperatives do give a return on the deposits you have with them. And if I'm right on this, it ranges around, from 7% to even 10%. That is what savings and credit cooperatives give for you to keep your money with them. Banks, they don't. So the issue has always been, why should people deposit money with banks and all that? And I think with the coming of this bill, if it comes into force, the depositors will be very happy. At least they'll be getting some return on their saved money. Now, I talked about the cost of borrowing going down. So that, of course, might lead to an increase in the uptake of loans. But now the key question would be now, what is the anticipated reaction from banks themselves? Now, one of the things I am foreseeing banks do is, just in case the bill comes into force, they might have now to think without the box, because now it means their main income source has been restricted. They might want now to look at the other sources of income at their disposal. They may want to look at Forex, okay? Do we now increase our portfolio in Forex, or do we increase our portfolio in real estate or other investments that we have, so that we get more income, or we make up for the reduced income from interest income? And the smaller banks might find it, might have difficult time. and they might even consider extremes, like even considering merging with other banks or seeking strategic partnerships because of the reduced margins on their interest income, which is their key source of income. But I would say the bill coming into force will be, it will be celebration, of course, for the public who would want to deposit or borrow, but for the banks, they won't have much to celebrate because it will be limiting their key source of income.